Oil 4-month high. What is leading it? Supply, demand? What's your take?
You know, I think it's a little bit of both right now. We're seeing some recovery out of the Asian markets and some strength in the demand. A lot of it's led by refined products right now, gasoline and diesel, and some shortages that are developing there. But yeah, it's a pretty constructive market right now. The OPEC Plus group is continuing to restrain supply. U.S. is still growing a little bit, but it seems to be pretty balanced. Inventories are coming down. They're not growing a little bit. So it's setting up a pretty good short-term macro demand.
So do we think we're in a new range? Is it a 70 to 90, or you feel 60 to 80? What do you think?
Well, we've always been kind of 70 to 90 range.
Okay.
Feels pretty reasonable for right now in the near term.
So what we've also seen in the near term is so many of your peers going out with some big M&A.
Yeah.
Now, what's interesting about Conoco is you guys have always done things like 3 or 4 years before other companies do, and you're not buying anything today.
No.
What are you doing instead?
Well, we're kind of leaning in. So we sat back a few years back and thought we're going to see a pretty constructive market going out over the next number of years, probably the next 5 to 10 years, well above our mid-cycle price for that equilibrium world. So in doing so, we thought M&A is going to be a little bit difficult in this kind of a market. When prices are above your mid-cycle, it's tough to transact. And but we looked at what we could be doing as a company, and that's where we wanted to start leaning in on the LNG side of the business, leaning in on some longer cycle projects like our Willow project in Alaska. So we're really spending time and spending some money doing that, but not at the expense of returns to our investors. So we're delivering competitive free cash flows to our investors while investing over the long term in some of these longer cycle projects, because we think we're at the beginning of a very constructive period in the macro. So now's the time to lean in on some of those opportunities. And we have a rich portfolio of them.
Is that a super cycle call from?
No, it's not. It's not a super cycle call. I just think it's going to be prices are going to be very volatile in that 70-90 range, but well above our mid-cycle price call in an equilibrium world. So that's why we're leaning in a little bit, and we're constructive kind of throughout the decade and into the next decade.
So let's get to the LNG part. What are you guys doing with LNG that's different from your peers?
So most of the E&P will sell some gas into a liquefaction plant, but we've known about the technology. We've been in the LNG business. We started that business up in Alaska in the 60s, and the first to trade in the Pacific Basin. So we know a lot of it. We have our own proprietary liquefaction technology. So we're leaning in to take advantage of where we think the arbitrage is going to be between Europe and Asia relative to Henry Hub prices. We see Henry Hub prices being low for a long period of time.
Under 2, yeah.
Yeah, natural gas is abundant in North America, but you got to invest in liquefaction. You have to have ships, and you have to have regasification on the other side, and customer relationships and a commercial organization to manage that. And we have all of that sitting inside our company. So that's a bit what we're unique relative to our E&P peers, with the capability and the ability to take advantage of those arbitrage and really move gas to Europe and to Asia.
Okay, so if we just stay with Europe for a second, that means that you take the natural gas, you freeze it, you ship it you put it on a tanker, you ship it, you put it at, say, Netherlands or Germany, and then they warm it up back into natural gas and use it.
Yes.
I thought that they were going to be all hydrogen, though, and they were going to be all green. Is that not what you see?
Well, I think hydrogen is going to take a long time to develop. I mean, it's going to be a fuel and a transition fuel over the years to come. But as we look at, even with the IRA bill and some of the incentives that are in place, it's going to take a long time to develop those markets today. And even Germany and Europe basically is saying all they want is green hydrogen, which is very expensive. The way hydrogen is going to develop is going to be gray, blue, and then green. And it's going to take a long time to get those markets in place. So in the meantime, gas is going to be really critical.
Gray, blue, and green, just how you get the hydrogen.
Yes.
What power you use to get the hydrogen.
A little inside baseball there.
We like colors. Okay, so to that point, what are you guys doing in the energy transition? Like, are you making big bets? Are you making little bets? How do you see that kind of thing playing out for Conoco?
We're spreading it around a little bit. We're doing things that are have adjacencies to the capabilities that we have as a company. So clearly, for a long time, we've been injecting stuff down into the ground. So CCUS makes a whole lot of sense to us, both to decarbonize sort of the Canadian oil sands that we're a big player in, or in and around our liquefaction facilities that we're building here in the U.S., or even our own operations that we have around the U.S. and really around the world. So CCUS, or carbon capture and underground storage, is something that we're leaning into. We are looking at hydrogen. We have a project in Corpus Christi that we're looking at today that includes sequestration of the CO2. Starts out as a blue. We're taking hydrogen from natural gas, injecting the CO2 and selling the hydrogen to customers. And we're aligning ourselves with the customers, similar to how we built the LNG business, 50, 60 years ago, in bringing the customers into the project. And they have to be willing to pay you a fair price over a long term to justify that large infrastructure being built.
How hard is that price to come by right now?
It's pretty hard.
How wide is that spread?
It's still, it's still out of the money, if you will. So it's going to take some work. We have to get technology to come to bear. We have to lower the cost of these facilities. We've got to get customers to sign up for long-term contracts that'll give us a competitive return on the investment that we're making.
Yeah,
so there's still a long ways to go to connect all those pieces.
Like de-risking the demand side, not just the actual build-out infrastructure side.
Yeah.
So I did want to get your take on a main theme here in Houston, which I was not expecting, was the massive build-out in data centers and AI and the power that's needed and how the power is not necessarily there yet. Do you have tech executives calling you right now?
Yeah, they are. It's pretty fascinating right now. This AI, machine learning, deep language model revolution is going to be huge, and the energy needs to satisfy these data warehouses and all the cloud infrastructure that we have in place and these data warehouses that are needed to power this AI revolution. The energy needs are going to be enormous, and it's going to take it's going to take a bunch of wind, it's going to take a bunch of solar, it's going to take nuclear, it's going to take oil and gas in order to satisfy the energy needs of this growing business, where the U.S. has a huge competitive advantage.
Do you think that that the data centers will plug into the grid, or do you think there'll be sort of direct power where they're like, hey, well, not you, you're not a power company, but hey, you random power company, will you supply me directly? No,
I think it's going to be a mixture of both. The most things they need 365, 24 hours a day, all the time power. So renewables with battery backups don't necessarily satisfy their baseload needs. So it's going to have to be a combination of power that externally comes in from maybe a renewable source, but they're going to have to be connected to the grid as well. That's the problem that's coming, is the infrastructure, the transmission lines to get the power that the needs that are going to be required are enormous.
Do you think we're going to be able to build all the data centers that everyone says they're going to build?
Well, it's hard to do that math. And somebody, and I think the real question is going to be what's the impact on the energy. I think it's going to be self-confining to itself because of the energy needs and the water needs. These data centers.
Before I let you go, you were one of the few CEOs last year to call the growth in U.S. oil production.
I got a lot of criticism early on.
You did, but you were right. And Macquarie says you could see 14 million barrels of oil a day this year in the U.S. What's your expectation?
Yeah, our models would indicate probably 300,000 to 500,000 barrels a day of growth this year coming. And the growth is starting to moderate. Last year we saw about 800,000, which is what our models would have predicted. So it is starting to moderate a little bit, but still growing. And I think the U.S. will surpass 14 million barrels a day.
This year?
No, not this year, but over the next couple of years.
What would be the circumstances where you guys would put more money into the lower 48?
Well, we're pretty balanced. We have a diversified global portfolio. We're putting money in to make sure that we're really focused on returns. We're just focused on making sure that we get the efficiency and the technology deployed, that we're maximizing the returns on the capital that we're investing. We are ramping our capital in the U.S. lower 48. We're ramping in Alaska. We're ramping in Canada. So there's capital coming off in other parts of our portfolio, so we can kind of keep the capital flat across the whole company at about $11 billion, which is what we're spending today. But the lower 48, the unconventionals get the predominance of that capital.
One last question here. Secretary Granholm just spoke. It seemed like there was going to be some relief in the LNG export pause. There's an election coming up. How does politics factor into Ryan Lansing?
Not at all. Not a bit.
You're not worried about the export pause?
I'm just kidding.
I'm kidding.
No. It's yeah. I mean, we're concerned. Look, customers are calling us and telling us, hey, what's happening? What does this mean for the long-term future? And what it's doing is it's setting up the problem in 2 or 3 years. So if the pause continues for a period of time, then customers are getting uncertain about what the future stands. And producers of gas are saying, am I going to have an outlet for my gas? So it's leading to sort of lower levels of activity. Current prices driving that as well. And if you continue with a pause and you do that, you're feeding the next cycle that means higher gas prices coming as a result of trying to pause this for too long. So yes, it absolutely has an impact in the market as we think about our plans and the LNG projects that we're trying to build on the Gulf Coast. It's real. And it has an impact. Now, I get what they're trying to do and assess what the U.S. market is going to look like. But you could do that in parallel. You could make these assessments at the same time that you're moving it along. They've chosen to do something different.
Do you think it goes away after November 6th?
I don't know. I hope it does.
Okay.
It needs to.